Today, Solana tumbles for the week while Bitcoin and Ether remain flat. Coinbase says the SEC is moving to withdraw its lawsuit against the exchange. And Andrew Fierman of Chainalysis discusses the findings of their latest crypto crime report. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto markets in the green this morning as we close out the week. As of noon Eastern, Bitcoin gained 0.2% and traded at $98,200. Ether was largely unchanged, rising less than 1%, and Solana rebounded following a rocky week, rising 1.6% today. But it's down more than 13%, largely a casualty of uncertainty around meme coins on the Solana blockchain. Bitcoin and Ether, meanwhile, were mostly flat, while the S&P 500 index lost 0.5%. Okay, let's talk about the top stories. Coinbase says the SEC will drop its lawsuit against the exchange pending commissioner approval. Coinbase CEO Brian Armstrong posted on X this morning saying the company reached a deal with the SEC staff to dismiss the case. He also joined CNBC this morning saying this was likely due to a change in the political climate.
In 2023, they came to us and said, we think you're trading securities on your platform. But the problem with that is if you go back to just a few years prior, we had gone public. We had explained everything about our business to the SEC. They asked us a million questions. They knew exactly what our listing process was and how we took a very conservative approach. And then a few years later, the political climate changed and they suddenly changed their mind.
This move would mark a major attitude swing towards digital assets by the regulator compared to prior leadership. The SEC charged Coinbase in June of 2023, alleging the firm acted as an unregistered securities exchange. The agency also claimed Coinbase failed to properly register its staking program. Armstrong told CNBC this legal battle cost the company more than $50 million. Meanwhile, the regulator still has ongoing lawsuits with dozens of other crypto firms. By noon, shares of Coinbase dipped by 1% after a strong opening. Next, shares of Block, formerly Square, tumbling this morning after the company reported weaker than expected earnings in the fourth quarter. While gross profit climbed 14% from a year ago, Block brought in around $6 billion in revenue in Q4. Now, that's compared to the nearly $6.3 billion Wall Street expected. On the earnings call, Block addressed its Bitcoin-related ambitions, saying it expects growth from its Bitcoin mining system, called Proto, in the second half of 2025. As of noon, shares of the company plummeted 15%. Last, Nigeria is suing crypto exchange Binance for more than $81 billion. That's according to Reuters, which reported that the country is seeking roughly $79 billion for economic losses and another $2 billion for back taxes. Nigeria detained 2 Binance executives last year, including American former IRS investigator Tigran Gambaryan. Both executives are no longer under Nigerian custody. We reached out to Binance but didn't hear back right away. All right, let's talk about scams for our main story. Chainalysis research found that crypto scams raked in billions in 2024. Crypto World's Mackenzie Sigalo spoke with the firm's head of national security intelligence, Andrew Fierman, to break down those numbers.
So you just put out your latest crypto crime report, which found nearly $10 billion in scam revenue last year. What's the biggest driver behind those numbers?
So 2024 is shaping up to be a record year when it comes to crypto-related scams. This is led primarily by high-yield investment scams, which accounts for 50.2% of overall scams this year, and also pig butchering, which is 33.2%. What's really driving a lot of this is the professionalization of the scam ecosystem. The ability to gain access to the technology and tooling to facilitate these scams is really driving efficacy for those engaging in the scam activity. Additionally, the accessibility to this technology is making it easier to expand and engage in more scam-related activity.
So crypto-related crime is clearly evolving, with scams becoming more sophisticated and state actors increasingly using cryptocurrency to evade sanctions. One of the more popular schemes, and you just mentioned it, is pig butchering. Can you explain that scam and how it relates to crypto?
Absolutely. So pig butchering scams, also known as investment or romance scams, are often cases where scammers gain trust from victims and ultimately get them to send them money. This is often done through cryptocurrency, where they route the victim ultimately to an investment platform, a gaming platform, some other way where they're going to send those funds. I think the really tragic part of this is ultimately that this is largely driven by scam compounds. So the scammers on the other end are oftentimes human trafficked individuals who are based in scam compounds in Southeast Asia.
So what's driving the 40% year-over-year growth in pig butchering scams, and how is AI making these schemes more sophisticated?
So the scammer victim is really always the main thought. And what I mean by that is that people, when they hear pig butchering, they think, okay, there's somebody who's conducting the scam and there's a victim who is, ultimately getting, screwed over by these scammers. With that said, the reality of it is that there's a lot of technology that goes into these scams. So how does somebody get your phone number to eventually, reach out? How do they send tons of those messages to millions of people? And then they have social media profiles. They have, AI voice and facial recognition to make them look like the person that they're representing themselves as. And so ultimately, this is creating technology that is much more effective for these scammers to make it believable for the victims.
So there's been significant geopolitical tension between Iran and Israel over the last year. Your report finds that this translates on the blockchain as well. Can you explain how this is showing up in digital asset transactions?
Absolutely. So one of the fascinating things that we really noticed this year was that flashpoint events are often indicative of what's going on in certain ecosystems. So when it comes to Israel and Iran, we noticed around a few major events where Iran was announcing that there would be attacks on Israel or vice versa, was an opportunity for Iranian nationals to move their crypto out of the country. We saw this especially when it comes to Bitcoin. So Bitcoin we see often as a store of value. And when there are major events like this happening, it seems that this was an opportunity for Iranian nationals to get their funds out of the country. A lot of concern typically around the Iranian government and controlling the ecosystem. We saw in December of this year, the Iranian government shut down withdrawals from Iranian exchanges. So it seems a lot of Iranian nationals in country are, anxious and want to get their money out of the country, especially around these flashpoint events.
Now, we've been talking for years about how Russia is using crypto to bypass sanctions. How has this practice evolved, and what enforcement measures have proved most effective in disrupting sanctions evasion?
So we've seen a lot of actions against sanctions evaders in Russia this year. Everything from large-scale money laundering operations facilitating billions of dollars of money movement to sanctioned Russian banks being utilized by these small exchange services that are facilitating on and off ramping of cryptocurrency between sanctioned entities and individuals within Russia. We've also seen sanctions against drone manufacturers. And I think one of the interesting things we're seeing here is that, this activity is being facilitated at scale sometimes in the tens of millions, hundreds of millions, or billions of dollars. With that said, a lot of these sanctions are helping disrupt these networks. There have been opportunities to seize and freeze funds. We've seen government agencies shut down dozens of exchanges that are facilitating this type of activity. So the opportunity here is pretty amazing when it comes to disrupting these networks.
All right, that's all we have for Crypto World this week. We're back again on Monday, and we will see you then.